morning and good afternoon, and welcome to the October 2022 DTN WASDE webinar. My name is Andy Miller with DTN, and I'll be your moderator today. And with me, as always, is Todd Hultman, Lead Market Analyst for DTN. Before we jump over to Todd, just want to remind everyone that all participants will be in a listen-only mode, but we do encourage you to ask questions at any time during the event. To do this, just click on the Q&A section located on the bottom right of your screen. This will open a Q&A panel. Type your question and simply click the send button. We also encourage you to ask questions at any time during the presentation. We'll queue those up for the end, and we'll address them after Todd has finished sharing his report. One last item, we are recording this broadcast, and we'll actually rebroadcast that recording on DTN.com within the next 48 hours. So that's that. Todd, I'm going to turn it over to you.
Thank you, Andy. Thank you, everybody. Thanks for joining us today here to take a look at the October WASDE report, the new set of estimates from USDA. I think obviously it's harvest time of year here in the U.S. We're all very interested in what USDA says about the yield estimates and the crop totals that we're expecting from this season. And so there's a little bit of anxiety or anticipation around those numbers, I think especially in soybeans, because just a month ago when we did this, we did have field data included in the results from USDA, but a lot of the crops were still pretty immature from earlier planting. So there was a question in my mind, at least, would the yield estimates differ significantly in this October report? And my concern, I think, was maybe soybeans would come in a little better than expected. So with all that going on, of course, we'll also have barge problems on the Mississippi River and more distress in Ukraine, which we'll talk about. But let's go ahead and get into the report and see what USDA said in today's estimates. We're going to start first with corn. This is the U.S. corn balance sheet from USDA. We'll start in the column that's on the second to the left. That's the old crop season. Now, from the September 30th grains report, we knew that the ending stocks total would be 1.377 billion bushels, as you see in the square at the bottom of that second column. So that's no surprise. We weren't sure exactly how they would distribute it, but we did know that they were going to increase the production, or reduce the production estimate by 41 million bushels, which they did. So the new crop for the 21 season is 16.33 billion bushels. It was also interesting that they increased the feed and residual account by 115 million bushels. Now, that always frustrates me a bit that they combine feed and residual, so we don't know how much is actually attributed to feed demand and how much is just kind of a balancing tool of being part of the residual account. But this is how they tend to balance things. And of course, it's the quarterly stocks report that keeps this whole process honest. They're matching up to the inventory that they found on September 30. So the application, of course, into the new crop season, which are the totals we're going to talk about now in the far right column, is that we're going to start the year with a lower beginning stocks total of 1.377 billion bushels than what we saw in September. We also have a new adjustment to the crop estimate. So now, if you look at the top two arrows, you see the new yield that USDA estimates for this year's crop, 171.9 bushels an acre. That's slightly down from last month. The new crop total, 13.895 billion bushels. That's the smallest corn crop we've seen in 3 years. With those reductions in hand, now we'll look at the next three arrows, and we see some adjustments to the demand estimates. And this is where I had a concern, especially with the river problems that we're having with low water levels on the Mississippi River. But first of all, in the feed and residual account, we see an increase of 50 million bushels. The new estimate there, 5.275. In the ethanol production estimate, we see a reduction of 50 million bushels. That's also reduced down to 0.275. So those first two changes just kind of washed each other out. There was a concern about the ethanol production estimate because we have seen a very sluggish pace of ethanol production the past 2 months, partly because the corn supplies haven't been available, but also we've seen a narrowing of margins in the ethanol situation. There's also a concern ahead that this whole situation about do we have a rail strike or not is not yet settled. And just yesterday, one of the unions voted to reject the new contract. So back to the bargaining table they'll go. And that keeps the ethanol industry a little bit cautious about what they want to commit to in terms of production if they're not going to have the rail available to move the supplies. So the last demand estimate we see, and this relates directly to the slow pace of export sales that we've seen so far this year, and also I think anticipates ongoing further problems from restricted barge traffic on the Mississippi River. And that's the export estimate being adjusted 125 million bushels lower. That estimate is now 2.15 billion bushels. So since the first two estimates washed each other out, this is really the significant change on the demand side of the ledger today. Put them all together, we see a new ending stocks estimate for the new crop season of 1.172 billion bushels. That is the lowest in 10 years for corn, and that is supported for prices. USDA's average farm price estimate being adjusted up a nickel to $6.80 a bushel. Now let's take a look at how this affected the world table. If we start in the upper right corner, we see the new ending stocks estimate for world corn numbers is down roughly 3 million metric tons from 304.5 down to 301.2 million metric tons. I always like to look at the number which excludes China because I have a lot of serious doubts that China is actually holding 7.6 billion bushels of corn in reserve. And if it is, I don't think it's probably very good quality. So to me, the important figure here is the world estimate of ending stocks excluding China, and that number was reduced in today's report from 97.3 million metric tons down to just below 95 million metric tons. And we'll see a chart of how that stacks up against previous years here shortly. The major changes from this report came from the adjustment to the U.S. totals, and were explained mostly by that. Another thing to note before we leave is that Ukraine's export estimate was increased from 13 million metric tons up to 15.5. That's just over half of last year's total. It works out to about 610 million bushels. So it does show Ukraine having some success in shipping corn out of the country. Now, of course, we're all concerned that perhaps Russia is not going to agree to extend that grain agreement here in November when it comes up to be renewed. So we're not sure how long the good export traffic that Ukraine has enjoyed will stay open to them. And then finally, I just wanted to show the demand estimate for China has not changed, still 295 million metric tons. The crop estimate for China also not changed. So no major change made in the world sheet for China as far as corn goes here on Wednesday. World corn supplies. This is the chart that I talked about showing you, and this shows the new total, which works out to 3.74 billion bushels of global ending corn stocks if we leave China out of the picture. And China doesn't export much or hardly any anyway. So to me, this is the important metric to consider when looking at world corn supplies. This is the second lowest total in 9 years. So this is still a fairly tight situation. And of course, we're missing the normal production that we would get from Ukraine, the world's fourth largest producer of corn or exporter of corn. Cash prices. This particular scatter chart, I haven't shown it for a couple of months, but I did have a request to come back and show this again. And so I will try to keep this as part of the webinar from time to time. And especially where we have a new estimate now for corn, the new ending stocks estimate of roughly 1.13 billion bushels works out to 8% of annual use. And so this is how we measure and compare corn supplies over time. This particular scatter chart, the blue dots represent cash corn prices over the past 24 years, 25 years of history, and they're all indexed for inflation to try to keep things current. And they're arranged in order of what USDA was estimating as an ending stocks to use ratio at the time. So if you see the red arrow, that is placed roughly where the 8% ending stocks to use ratio is. We look up and we see a lot of blue dots that could range anywhere from $4 to $8 or above. The red line is what we're looking at, though, the slanted red line. That's the statistical center, which tells us what price we would normally expect in this particular supply situation based on where cash corn prices traded in the past. And that number today is $6 a bushel. So you can consider that, fundamentally speaking, that is considered fair value in today's market. The current price from DTN's National Corn Index, we take an average of cash corn bids across the country, and that index last night closed at 691. So you can see we're trading 91 cents above this fundamental assessment. And obviously markets are volatile. There's a lot of emotion involved, but that's the way it looks currently. I wanted to show you and talk about the situation on the Mississippi River for just a minute. This is a map of the Midwest with cash corn bids spread out throughout, and we've seen very favorable cash prices throughout the entire year. And in fact, even today, even though we've seen a weakening of bids along the river, and especially the upper Mississippi River, if you notice that oval, kind of marks a lot of corn bids in the lower $6 range as they go along the river there. Well, our national average on the DTN index is 691 for the entire Midwest. So the below average bids are coming along the river, and of course they're being penalized for the restricted barge traffic that we have of especially low river levels from, say, St. Louis or Memphis south. Things are very tough, and the traffic's been restricted. So obviously that's a concern for both corn and soybean movement. And we'll talk about that in just a second. But I wanted to show how the cash bids are distributed. If you notice the rectangle in the southwest corner of this map, you see a lot of cash corn bids at $7 or higher. And of course, that's drought area, that's cattle country, and that's where it's very tough, much tougher to find corn than it is in the eastern Midwest. So we see that situation being reflected there. Corn shipments. Now I understand this chart may be a little hard to figure out at first, all the squiggly lines, but the red squiggly line are weekly exports inspections of corn that we get from USDA on Monday mornings. And the red line is for this calendar year. The most recent week was just revealed on Tuesday. They said 18 million bushels of export inspections. I want you to just notice the general pattern of the previous years. This goes back to 2017, all those lines. And if you notice, the very active time for corn shipments is roughly January to June. And that's when we really need that river to be working for us to help accommodate that grain movement for corn. Right now in the fall, as we'll see later, it's really the most active time for soybeans, and this tends to be a quieter time for corn. So even though the restricted barge traffic is a problem for corn, at least we have a few months here of possibility to try to get an improved situation. So this obviously it's not a good situation to have corn and soybeans being harvested this fall and to have the river bottled up the way it is. But in the current time frame, you're going to see this is much more of a problem for soybeans right now than it is for corn. But once we get past January, there's going to be a need to accommodate more corn movement, and that could be a problem. Corn speculative positions, before we move on to soybeans, I just want to show what the specs have been doing. The green line that you see on the lower part of the chart is the amount of contracts that speculators are long in the market. And of course, we saw that big sell-off from May to mid-July this year, that big drop. And in that sell-off, those long positions were cut to their lowest totals since the pandemic. So it was a pretty sharp sell-off as far as washing out speculators. Since that mid-July low, the market has rebounded very well price-wise, but speculators have been somewhat cautious about getting back into the long side of corn in this market. And in my mind, that's actually a good thing, because it tells me that the corn prices are being more supported by the commercial side of the market right now than they are any type of emotionality from the speculative side of the market. Okay, let's shift our gears now and take a look at what USDA said for soybeans today. I think there were some concerns that the ending stocks number for soybeans could come in higher than expected. I certainly shared those concerns. I didn't, have any great insight as to what was going to happen, other than I will say our Grow Intelligence yield forecast for soybeans was 48.4, and that was last seen on September 9th. So they were still making the argument that the soybean yield should be lower than what USDA said. Well, here's the U.S. balance sheet for soybeans, and I'll just go ahead and take our attention to the far right column there. And up at the top, we see a new yield estimate of 49.8 bushels an acre. So USDA actually trimmed their yield estimate slightly from 50.5 a month ago. That gave us a lower crop estimate total of now 4.313 billion bushels, and that is down 65 million bushels from USDA's estimate a month ago. So as we're getting more field data and as producers have gotten into some early harvest, the results are coming back somewhat slightly more negative for soybeans in terms of yield. So they're looking at a 49.8 bushel an acre estimate there. Now, same with corn. We're concerned about soybean exports, but in this case, USDA didn't make any changes that were too harsh. First of all, the crush total, which is the third arrow from the top, we saw an increase in crush demand estimate from USDA, up 10 million bushels. And I think probably just about every daily market comment I write about how strong that crush incentive has been this year, and is providing a good demand scenario from the soybean processors here in the U.S. The export total, which we were all concerned about, USDA reduced the exports by 40 million bushels from 2.085 down to 2.045 for the new season. Now, obviously, this will be a fluid situation, and we'll see how things develop, but USDA so far is just starting out with a 40 million bushel reduction in the export sales total. And it was interesting this morning to see China come in and make a purchase of 19 million bushels of soybeans, which was announced earlier Wednesday morning here. The new ending stocks estimate in the lower right-hand corner, 200 million bushels. It did not change from last month's estimate, even though the crop estimate came down a little bit, the export demand dropped, so things basically offset. Now, USDA's new average farm price estimate was reduced by 35 cents down to $14, but I'll show you our chart here in just a minute to give you an idea of how I see the value of soybeans compared to historical prices. On the world table for soybeans, let's start with the upper right-hand corner, and we see that USDA's estimate of world soybean stocks increased slightly from 98.9 million metric tons up to 100.5 million metric tons. Now, there was a few things involved here to point out. So first of all, in the upper left corner, we see that's the number for beginning stocks that increased from 89.7 to 92.4. And those beginning stocks were the results of two changes in the old crop estimate. And the first change was that the U.S. ending stocks total, of course, was increased, and that came from our September 30th report. But the other change that was not expected was that USDA increased the soybean crop estimate for Brazil in that old crop season. Instead of 126, they're now looking at 127 million metric tons. So they made kind of a late after the effect adjustment to Brazil's soybean crop total. Now more up to date here in the U.S., we see a lower production estimate. That's in the second column. But I want to direct your attention to the long, tall rectangle in the second column and look at the South American crop estimates. Now, keep in mind, Brazil is just starting. Their soybeans are roughly, I think, 6 to 10% planted at this point in time. So it's still very early in the season. Argentina hasn't really started much as of yet. They've been quite dry. And of course, it's not as warm yet in Argentina, but they'll get going here pretty soon. So the crop estimate for Argentina was unchanged at 51. There was some possibility that that could have been reduced already because early conditions are dry in Argentina, and there doesn't seem to be much rain in the forecast just yet. The crop estimate for Brazil was increased from 149 to 152 million metric tons. So USDA going along with CONAB's estimate earlier this week, or at least getting close to CONAB's estimate. I think CONAB was at 152.4. CONAB, yeah, 152.4 million metric tons earlier this week. So USDA staying close to Brazil on their crop estimate total so far. And of course, if that comes true, that will be a big 5.6 billion bushel crop. That'll be a new record. But of course, as I said, they're just getting planted now, so there's a lot of weather risk between now and harvest yet. And then finally, the estimate for Paraguay unchanged, 10 million metric tons. The last thing I wanted to point out, USDA did show acknowledgement of an increased level of soybean demand in China. That's something I've been talking about quite a bit, that even though the economic headlines from China have not been good this year, and in fact have been quite negative overall, we have not seen any pullback in the soybean demand indicators as of yet. And in fact, even as of this morning, November soybeans on China's Dalian exchange hit a new contract high. So it wasn't too much of a surprise to see China come in and buy soybeans from us this morning, and I'm glad to see USDA acknowledging that that soybean demand in China is staying strong so far. They also increased the import estimate for China from 97 to 98 million metric tons. So we continue to see active demand coming from China now. We can just get a river open to accommodate that, it would be very good news. Here's the history of cash U.S. soybean prices. That's the blue dots on the chart over the past 25 years. And if the new ending stocks estimate, by the way, of 200 million bushels represents 4.5% of annual use. So that's a historically very tight situation. We don't have a lot of previous years to compare to levels that tight, but you can see by the blue dots above the red arrow where the 4.5% mark is, that prices that when supplies were that tight in the past, and again, this is indexed for inflation, it would equate to current cash soybean prices of roughly $13 to as much as $20. The statistical center at this time is $14.50. Now, DTN's National Soybean Index of cash prices is currently averaging $13.27. So we're just over $1 below what we would normally expect for a supply situation this tight. Of course, there's all other sorts of other factors going on, and concerns about barge traffic is one of those. Similar to the corn chart I showed you of weekly soybean export inspections, this is the pattern that normally happens for soybeans. And if you see this, you see that in most years, we'll see export inspections, and that kind of represents the movement of the soybeans in traffic. Typically, that starts to pick up in August and September, and then we have a very active period from October to, say, at least January, sometimes part of February. This year, however, we've seen pretty quiet soybean movement, especially in the month of September with the low water levels on the Mississippi River. This week's estimate, or this week's inspections number from USDA came in at 35.6 million bushels, so that was an improvement on the previous week, which was good to see. But as you can see, we're at a time of year where we really need those soybeans to be moving actively, and that's going to be very difficult without much help from rain in the forecast. There is some light to moderate amounts expected in the next 7 days, but we need much more to help those river levels. Here's the basis situation for soybeans. We've seen quite a drop in DTN soybean index of average cash prices, now down to $13.27 a bushel as an average across the Midwest. Now, it's not uncommon to see a big drop at harvest time as you make the transition from old crop to new crop. That's not unusual, but again, as we saw with corn, we're seeing some of the lowest soybean bids along the Mississippi River, and of course they're being quite penalized for being near the river in the upper part of the river from Minneapolis down, where you see that long oval. That's where you see some of the lowest bids. I also wanted to point out the St. Louis area, where just not that long ago we saw bids near $17 a bushel. Those have also dropped into the low $12 range. So that's where your below average bids are at this time. And of course, that reflects those concerns on the Mississippi River. So we're going to have to move a lot of soybeans and find ways to do that. We're starting to see them pay a price. Now, the surprising thing to me is that even though we've seen quite a drop overall in the cash bids for soybeans, and we've seen the basis drop quite a bit, it's now 50 cents below the November contract. For this time of year, that's still the second strongest basis in 9 years. So this still isn't like the days where we had, a 2.5 billion or a 500 million bushel surplus of soybeans. It still doesn't compare to those days. But obviously, we're seeing weakness in the bids along the river, and that continues to be a concern this fall. The stellar bullish source of support for soybeans all year long continues to be crush demand. And on that count, we just see no weakness whatsoever. And that's the good news for soybeans and soybean demand. And so I was glad to see USDA increase the crush estimate by 10 million bushels, at least confirming that the crush demand side of things is staying quite profitable for soybean processors. This chart shows the blue line is this is all based on the January futures prices at the moment. The blue line is the value of what you get from crushing a bushel of soybeans. And in this case, the meal and the oil comes out to a value of $16.94. This is taken last night. That is $3.06 above the cost of the soybean, which is $13.88. So typically, this crush premium has run at roughly $1.50 a bushel historically. And maybe sometimes when things were really good, it got up to $2 a bushel. Well, all year long, just about, we've been running in very highly profitable territory of $2.50 to $3 a bushel. So this is the good news for soybean, and really reflects a strong demand for both soybean meal and soybean oil at this time. The speculative positions for soybeans, unlike corn, We have not seen the specs return back to the long side of soybeans yet. We're still at the lowest levels that we've seen all year. And so to me, it's good news that number one, soybean prices have been holding up as well as they have without support from the speculative side of the market. And again, I think that is a good tribute to the commercial demand and the economics of soybeans at this point in time. Now that this sentiment from the speculative side can change someday, and but we would probably have to see soybeans break new highs on some level, maybe the $15 level, before specs would return again in this market. But for right now, soybeans are holding support fairly well, which maybe is not too bad when you consider the demand and the movement problems we have on the river. And obviously, today's report showing 200 million bushels, which is a very tight level of ending stocks, helps support those soybean prices. All right, time now to move on to wheat in the U.S. balance sheet. I just want to point out one change in the old crop estimates that USDA put in there, and that's the lone red arrow in the second column. It shows that feed demand for wheat was decreased by 8 million bushels. Not a big factor, but they did make an adjustment of old crop feed demand, and that increased the ending stocks estimate for the old crop total from 660 up to 669. Now moving to the new crop side, which is the far right column, we see the new production estimate, 1.65 billion bushels. That was given to us in the small grain summary on September 30. It was a bullish surprise and quite a drop. That's 133 million bushels less than USDA was estimating for production in September. So it tightens wheat stocks significantly. As far as other demand changes, in the new crop season, there was also a 30 million bushel reduction in the feed and residual account. As wheat prices are getting higher, perhaps they're being less attractive to mix into that feed mix. And an ongoing concern that we've had for wheat is the future of exports. And in this case, USDA reduced the export estimate from 825 to 775 million bushels. And of course, they're doing that because basically as an adjustment to the new low supply total. The new ending stocks now are only 576 million bushels. That is the lowest ending stocks the U.S. has seen in 15 years. So this is an extremely tight market, and obviously that should be supportive to wheat prices across the board, although last time I looked, they were trading lower. And I'll try to give us an update before we leave the webinar today. So anyway, 576 million bushels, lowest ending stocks total in 15 years. That is certainly a source of good bullish support for wheat prices as we head into wintertime, and should be a concern to anyone that needs to buy wheat. Which categories of wheat were affected the most? Well, it turns out that the ending stocks estimate for soft red winter wheat was reduced by the most. Instead of 125 million bushels, USDA lowered that category to 91 million bushels of ending stocks. That is the the soft red category is traded as a Chicago futures contract. So that's where the benefit should come out. As far as hard red winter wheat, there was a slight 3 million bushel reduction. And for the spring wheat, there was a slight 3 million bushel increase. So not too much changes for those two, but a significant reduction in the soft red winter category is where that showed up. On the world ending stocks for wheat, let's look at the upper right-hand corner, and we see that the USDA's ending stocks estimate for world wheat was reduced slightly from 268.6 million metric tons down to 267.5 million metric tons. As I do with corn, I like to look at the totals which exclude China because they're not a big source of wheat exports anyway. and that number of ending wheat stocks without China was reduced from 124.2 down to 123.2 million metric tons, a slight reduction. Now, I want to bring your attention to the production estimates, which is the long, tall rectangle in the second column. And of course, the question that everyone's had is, when is USDA going to increase the crop estimate for Russia? Because there's a lot of private forecasts that put Russia's crop at 100 million metric tons. But here, USDA, for whatever reason, and I'm not sure I can understand it, but I would love to hear them discuss it. They're keeping their estimate at 91 million metric tons. In fact, they kept a lot of their estimates the same today. The only two that changed, of note, Argentina's wheat crop was reduced by 1.5 million metric tons. We've been talking about dry weather situation there. Probably the surprise of the day, USDA increased the wheat crop estimate for the European Union up to 134.75. Now, Europe had pretty hot, dry weather this year. We saw their production was knocked down from a year ago, but here in October, they're giving them back some of that production. Lastly, before we leave this page, always interested in the exports totals for Russia and Ukraine. In this case, they're not changed yet. So 42 million metric tons for Russia, 11 million metric tons for Ukraine. World wheat supplies, how does the new total, excluding China, compare to prior years? Well, the new 123.2 million metric tons of world ending wheat stocks, apart from China, is also just over 4.5 billion bushels. That is back to being the lowest in 15 years. So this is a very globally tight situation, and that's one of the reasons the United Nations is concerned about increased food insecurity in 2022. What do wheat prices look like fundamentally? Well, the current ending stocks estimate of 576 million bushels works out to 31% of annual use here in the U.S. The historical target for that, based on the past 25 years, is $6.30. We're currently trading over $3 above that. So are wheat traders crazy to be trading this high? No, not necessarily, because one of the things that we also have going on here, obviously, is a very tight world situation, which doesn't always match up with prior years as far as U.S. supplies go. And of course, we have the wide range of uncertainty and potential for surprise coming from the Black Sea region, where Russia continues to attack Ukraine relentlessly, and there's all sorts of tough things going on. Even in today's news this morning, AP reported once again that the largest nuclear plant in Ukraine has come offline, been disconnected from external power, and is now running on diesel generator backup. And supposedly they have fuel for 10 days, but that's a very dangerous situation to have your nuclear plant disconnected from the power source. So wheat continues to be a very dangerous, potentially volatile market, as you probably are well aware. The basis for wheat, for HRW wheat, in this case, is 40 cents below the December. Our national cash average of the HRW wheat prices is $9.51 from last night. That's up 64 cents from a month ago. But as far as the basis goes, it's roughly average compared to the past 5 years. So nothing too crazy in terms of HRW wheat basis at this time. As far as the speculative positions in wheat go, like corn and beans, we saw a big sell-off this summer. Lows were made in August, and when those lows were made, non-commercials were holding their smallest long position that they've seen in 7 years. So it was quite a washout of speculators this year. And of course, I think just being afraid of volatility and the war situation obviously also contributed to that. Now we've seen quite a comeback in wheat prices, almost a $2 rally since the lows were made in August, but the speculative side of the market has not participated much. They've been very reluctant to get back in on the long side of the wheat, and I think the war probably explains a lot of that. The good news is wheat prices should behave a little better without such a large position of specs in the market, and should make a little more sense from a supply and demand situation, especially as we head into winter with a very tight supply. Well, I mentioned I was going to give you prices at this time. As I show it on the board right now, corn, December corn down 1 1/4, close to 6.92. November soybeans are up 23 cents on the day. They like that 200 million bushel ending stocks estimate. And in the wheat contracts, we're seeing 19 to 21 lower trade. And perhaps part of that is that there is some rain in the forecast for Texas the next 7 days. So there is some benefit offered to that new HRW wheat crop. All right, well, at this time, the conclusion is I'm calling slightly bullish for corn. And in spite of the concerns we have about barge traffic problems, USDA's ending stocks estimate continues to be at a 10-year low, which is supportive for prices. Similar with soybeans, in spite of the barge traffic problems, we're looking at the lowest ending stocks estimate in 7 years. We also got a little smaller than expected crop estimate. And I think there might have been some relief that the crop estimate didn't go higher, because there was a lot of uncertainty about what USDA would say about the yields today. And then lastly, it's hard to say anything but bullish for wheat. Obviously, U.S. and global ending wheat stocks are at 15-year lows, and it's hard to say anything other than bullish for those situations. So we continue to have a very tight supply situation for all three crops, and that should be offer some support in the months ahead here. All right, Andy, this is a great time. If anyone's come up with questions, I'll be glad to take them and do what I can.
Well, we had one, but related to barge traffic, but I think you've answered that probably a couple times over. So I think we're good there. Otherwise, I did not have anything come through. I even I tried to craft my own question just to keep everybody entertained here, but I think it's been pretty straightforward today. So no questions from the group here. So that said, I think we'll go ahead and thank everybody for joining. And just a reminder that we'll have this rebroadcast on DTN.com within the next 48 hours. And Todd, as always, generously has put his contact information on the screen and is happy to connect with anyone who chooses to do so. That said, I'm going to conclude our event for the day, and I'll say one more time, thank you for joining. Have a great day.
Thank you. Thank you, Andy. Thank you, everybody. Have a good day.